You're a talk show animal. You're like one of those goddamn creatures out of Greek mythology. Half man, half desk.
Welcome to the Oilfield Leader Podcast.
Are you thinking about buying a house? Do you work in the oil field? I'm here to introduce you to Rodger Horton. He's a mortgage banker at Benchmark Mortgage in Midland, Texas. He's won numerous awards for outstanding customer service. In fact, Rodger is from the Permian Basin, and he's from a family of oil field workers, but he chose a different path, finance. Lucky for us, it wasn't the Wall Street type finance, but the most important to guys in the oil field, helping oil field workers get mortgages. In fact, at least 80% of his clients work in the oil field. So if you're in the Permian or up in North Dakota or anywhere in the United States where there's someone bouncing up and down a lease road who want to or thinking about buying a house, this is an info-packed episode. We talk about credit, interest rates, what oil field workers especially need to keep an eye out to put their hard-earned money into their dream home. Let's go ahead and join the conversation.
So you bring us experts in.
Exactly. That's why I brought you here.
You look like the genius.
I am the genius.
I'm seeing where you're going with this.
Well, someone has to be. Well, see, as a mortgage banker, which I used to be, it's not unlike running a podcast because you have to herd cats. You're constantly herding cats, whether it's your title company or it's your customer, your client. It's always someone you have to wrangle.
Amen.
Amen.
Yeah. W-2s, paycheck stubs, we're always chasing down something.
Chasing something, right. And actually, we were just talking a little bit prior to air that 1099s is really big right now in the oil field. What's up with that? How hard is that to get a mortgage with something like that?
So, and I'm seeing 1099s all the time, and not being a CPA, I don't know the complete ins and outs of it, but I know especially like these service companies and stuff, they keep their expenses in check. If people are 1099, they're contract workers, they're not having to pay the tax expense, benefits, stuff like that. So right. 1099s are coming out of the woodwork. And even if you're a straight 1099, I think earlier I used the example of Exxon. You may be working for Exxon, but if you're 1099 in the mortgage world, you're self-employed.
Right.
Self-employed opens a can of worms in mortgage all the time because of the requirements for 2 years of tax returns.
Right.
And so if you're self-employed, whether it's just 1099 or any other kind, have to have 2 years history in that. We qualify income via 2 years tax returns. So, for instance, I had a oilfield worker earlier this week that he has done a couple of jobs. A couple of them have been W-2s, but now, boom, he's 1099. And for buying a house, self-employed. So he started a few months ago. We're in 2023 at an absolute minimum. We've got to have 23 and 24 tax returns.
Wow.
So the earliest he's looking at being able to buy a home with traditional financing is early 2025 after he files that 24 tax return. You know, a lot of people don't get their 1099s and everything else out until late January. It takes a couple of months to get your return filed. I mean, it pushes people back. But unfortunately, with some of these jobs too, if he goes and takes another job, it could be W-2. So it's like, how do you do that dance?
And that's what I was going to ask. If he goes to a W-2 job, even part of the year, does that set him back? Does he have to be exclusively 1099?
It depends. And of course, in mortgage, everything is completely different, one thing to the next. A lot of it depends on pay, opening another can of worms, going into overtime and stuff like that. But as far as the 1099 versus W-2s, so in a mortgage, we have to have a 24-month employment history. Doesn't have to all be with the same employer, but really needs to be at least in the same general line of work. So we can string together 1099 jobs and W-2 jobs for that employment history. But then when we go back and forth like that, it's like, okay, what can we put together for qualifying income? Oilfield patch workers, some of them, they work more hours in a week than I even knew existed in a week. I'm seeing people that are putting in 80, 100 hours a week. So, I mean, by if they start Monday morning, by Tuesday afternoon, they're starting to pop overtime.
Right.
And so the overtime is the biggest piece of their earnings. And once again, some of those things, depending on the loan program, we have to have at least a 12-month history of overtime, if not a 24-month history of
use
overtime.
it to qualify.
Yeah.
There's a meme, but we also say it out here too. It's like, oh, you work 40 hours. That's really cute. We do that too before breakfast on Tuesday.
Yeah.
So yeah.
I mean, working in the office, I get the air conditioner. I hadn't been facing these 110-degree days
Brutal.
outside on a rig or platform or anything else. And I don't know what it's like to work 100 hours a week. These guys are killing it, and finances are good. But it's once they look to buy a home, what does it look like on getting them qualified?
See, but that's hilarious because, right, like, even though your family has worked in the oil field, you don't. Like I think you have one family member who's a doctor, and you do finance, but everyone else works in the oil field. So you're really, really familiar with that. But I want to ask you this because, like you said, it puts somebody back. Like I kind of want to zoom to the beginning of the tape and be like, if you want to buy a house, oh, it's really nice. I want to buy a house. Hey, I want to buy a house. Okay, sure. What's the first step? You don't talk to a realtor because a realtor is going to say, hey, how much house can you afford? So then your ask gets sent immediately to a mortgage banker, and the mortgage banker is like, hey, I'm going to go 2 miles up your butt with a power tool and find out everything I can about you, right, to qualify you for a loan. Does it feel like that to you sometimes?
I mean, don't scare everybody off. That power tool's not as big and mean as it looks. But yeah, absolutely. I mean, honestly, very few times do I get potential clients that come into me and I'm their first stop along the road. Multiple times, I mean, more times than not, just like you mentioned, I want to buy a house. What's the first step? I need to contact a real estate agent, or I need to reach out to the sales rep for ABC Builder or whoever they're looking to buy the home from. Right. So, yeah, sometimes people come to me first, but most of the time they're going directly to the place that you would start with buying a home first, but always first question with any reputable real estate agent, builder, or anything else. Okay, have you been pre-qualified? Because they want to make sure that they know that they're spending their time wisely. If they're going to go out and show 20 houses over a weekend, they want to make sure that the person either has the cash to buy the home, which happens more than you would think, or that they've taken care of the early financing requirements and are pre-approved to get out there and do it. Because, I mean, realtors got to eat too. Everybody thinks that they've got the easy job, but honestly, I'm glad I'm not a realtor a lot of days because they get out and hustle.
Yeah, no, and that's very true. And also related to something we were saying earlier is that so much in this business of real estate and real estate finance is commission based. So you have to do a lot of front end work that you may never see the return on, say, because of the way that it goes.
Oh, you're 100% right. Real estate agents, 100% commission based. Mortgage lenders like myself, maybe not all of them, but the majority, especially the ones that are worth their salt, 100% commission. We don't get paid if the deal doesn't close.
And this is something that fits in, and it's because I use buying a home as a prime example for this. But I tell people this, right? If you have a goal and you've decided on that goal and you start actively working on it, people will come to help you. And I use the example of buying a home. All you need to do is be prepared. Credit score, right? A job, credit score, and money for a down payment. If you can come to the table with those three things, folks, there are people lining up to help you. They want to help your dreams come true. Why? Because they're going to get a piece of the pie. They're going to get a piece of the pie, and they're going to get some reward for it. But you need to be able to come to the table square and proper, right? You
nailed it. There are a lot more pieces to a 1003, which is mortgage lingo for a loan application. Mm-hmm. We need a lot more information than that. But when we're looking at credit, we're looking at income/employment. and we're looking at assets, which, I mean, not every asset, we don't need a personal financial statement, but we've got to make sure that you have liquid funds for closing costs, for your down payment and closing costs. If you've got those three things figured out, we're going to help you. But then there are a ton of different mortgage options.
Right.
I mean, just on the surface, you've got FHA, your federal government-backed loans. You've got conventional, and you've got VA for qualifying military veterans. Those are the ones that we see most of the time. But did you know within conventional, there's multiple different down payments. There's also multiple different sub-programs for different income classes that can help with lower down payment or a tiny bit better on your interest rate. It's all these things that come together to make sure that you're not just having somebody that's putting you in one of three buckets, actually one of two buckets if you're not a qualifying military veteran,
Right.
but somebody that knows how to dig in there and get exactly what's going to save you the most money. Because, I mean, you think that a couple of dollars may not make a big difference on a monthly mortgage payment, but, I mean, the average mortgage loan lasts 5 to 7 years. A couple of dollars over 60, 70 payments, it adds up. And, I mean,
Yeah.
I like Chick-fil-A. I can buy a Chick-fil-A chicken sandwich with those savings, you know?
Right. Exactly. And it's funny because we've had other guests on that, you know, and it's funny because we were referencing shooting just slightly a little bit earlier. And it's funny because you can be, you line up the sights and you could be off by a millimeter and you think, oh, it's the sights, I'm off by a millimeter. But downrange, you have now missed the target by 5 feet.
Oh, absolutely.
Right. So it's making sure you have those things square at the beginning. That's fascinating. So when people come to you, right, they need to make sure that they can prove they have enough money, right, for a down payment on a house. So you want a bank statement. You're going to want to, your credit score, or obviously your mortgage banker is going to pull your credit for you. And you're going to want to make sure, obviously, you're gainfully employed. And if you can, bring like your last 2 statements. The one thing I did want to go back though, is that you said you got FHA, conventional, and military. So FHA, let's exclude military because obviously military is kind of self-explanatory at the moment, even though we do have a lot of audience members who have been in the military. But between FHA government, conventional basically means the private loan market, right? Just like the regular bank, regular mortgage market. Is that correct?
Exactly. At the end of the day, we are all governed and regulated through the federal government, but FHA is specifically a government-backed and insured product. Many people confuse FHA with just a first-time home buyer program. You do not have to be a first-time home buyer to qualify FHA. FHA, with that government insurance that stands behind it, allows us to go to lower credit scores along with lower down payments. So with a 580 or higher credit score, you could qualify still with the 3.5% down payment versus conventional. It doesn't have that government insurance behind it. So it is the kind of standalone. It is what a lender is willing to lend on risk-based. So the more risk, the more high pricing is factored into it, or the more skin in the game the borrower is going to need. So a 620 borrower can get a conventional loan, but they're going to need every bit of 20% down payment, and probably also going to have some other compensating factors. So that FHA opens the window of home ownership to a lot of people that may not otherwise qualify for it without having to come to the table with 20% down payment. And you have any idea right now what the median home price in Midland is?
That is a good question. I don't know the answer, but I'm going to take a stab at it.
Give me your best shot.
I'm going to say $320,000.
$395,000 median home price.
Wow.
And of course, the median is just right there in the middle. So, right. I mean, the average is likely a little lower. And I don't have my calculator in front of me. So for easy math, I'm going to round up. If you're a low credit score borrower that's wanting to buy a home that's in the median range of Midland, Texas, let's round it up to $400,000. For 20% down, you need $80,000 for just the down payment before closing costs.
Right.
But with FHA, you can come to the table with 3.5% down. So my easy math gets a little more difficult, but I want to say that 3.5% on $400,000 is about $14,000. Right. hell of a difference between $80,000 and $14,000 to get into the same home.
Right, but obviously the money's got to go somewhere. So that quote unquote savings, you're paying back for it either in length of term, I'm going to guess, potentially, or a higher rate. Because there has to be some give somewhere. There's no free lunch.
There is a little. Rates might be a little bit higher, but they're not going to be so much that it's not advantageous still to buy versus rent. The main thing on FHA, a couple of things really. FHA has a upfront financed fee that gets financed into it. So even with that 3.5% down, the finance fee is 1.75%. So half of that is essentially paying for the finance fee, because it's just the way the math works out.
Right.
And then mortgage insurance. Unless you pay 20% down on a conventional mortgage, or you're one of those VA buyers, you're going to have mortgage insurance no matter what. On conventional, if you have the loan long enough that you pay it down on its own or several other factors, mortgage insurance goes away. If you're doing minimum down payment on FHA, that mortgage insurance is never going to go away. So there are some additional costs, but for people that do things the right way, are advised correctly, and take care of their finances, there's nothing wrong with starting with an FHA loan and either using it to get into home ownership with your first home and selling it and taking the equity to put into a next, or even the next time a rate cycle comes down, refinance.
Right.
There was hardly a borrower at all that we closed anywhere between 2015 and 2019 that didn't have an incredible opportunity to refinance in 2020 and 21. And of course, anybody that knows anything about housing, mortgage rates, everything else knows how low interest rates got during that time.
Ridiculous.
I don't know if they'll ever get that low again. I mean, half the world economy had to shut down.
I was going to say, on one hand, I hope yes, but on the other hand, I hope no, because of what it costs to get there.
It was good for my business. Let's not get that wrong, but look what happened to everybody else. I mean, oil for a brief period of time, we're talking oil and gas, hit negative $40, $50 a barrel for futures.
They would have paid you to drive up a tanker and take fuel away.
Which is insane.
It's insane.
And
for 3 days or 2 days.
Everything's cyclical. So we don't want the world to shut down again to pull rates into the 2s and 3s for 30-year mortgages. Yeah. But there's a lot of buying power that would just come back getting to 5%, and everything's cyclical. Everything that the Federal Reserve and the federal government's doing to fight inflation right now will lead into another recessionary period at some point. They'll have to pull rates back down to spur the economy again, and it'll make things more affordable. And that's honestly, that perfect segue. I think you set that up on purpose.
Of course.
That brings back to what a lot of people are facing right now. Like, do I buy now or do I wait until interest rates are going down?
Right.
You've heard that, hadn't you?
Of course.
If you've talked real estate to anybody, it's like, I'm really interested in buying a house, but man, I'm going to wait till those interest rates go down.
I'm like, okay, good luck with that.
Yeah. Well, if rates never go down, rates never go down again, the rate that you get right now is the best rates are going to be for the next 30 years. Well, you're locking in good.
Right.
But if they're not, you can always refinance that rate. Average appreciation in Midland County has been about 3.5% historically since records have been kept.
Wow.
It's forecasted to be about 4.5%.
Wow, brother, I didn't know that.
Yeah, so I mean, including the costs that you have for buying, the closing cost and everything else, the majority of people are already in the black on a home 12 months into buying just on appreciation, and that's not even including paying their loan down through the typical monthly payments.
Right.
So through the stretch of 5 years, 7 years, I mean, there is 5-digit appreciation and wealth that's being built, and that's with rates at 7%. If you get an opportunity to come back and refinance down to 7 and lower that payment and still be paying down your mortgage and building wealth, to me, it makes a lot of sense to buy. Not immediately. It's not the right time for everybody, but when it's the right time for the individual, don't let an interest rate back you off, because real estate prices historically always go up. So say you wait 18 months, you're going to buy the same house for 3.5%. historically more than you would have a year and a half before.
Right.
And also, do you remember you bought a house, didn't you, in 2020 range?
Yeah, I did.
Like, do you remember how competitive it was to go out and try to make an offer on a home?
It was insane.
Some homes were going on the market and had 20, 30, 50 offers in 24, 48 hours.
There was a point, and and also by a bit of disclosure, I am also a former mortgage banker many years ago, just as full disclosure. But it was just insane. No, I don't even know how to explain it, but I did want to say that is something that I'm very deeply grateful for, because that is what has allowed my family. And I think that's the American dream, especially if you're working out here, right? Working on American oil and gas and American oil,
Absolutely.
Energy independence. And it provides enough for you to advance your family. And that's what it did for me. I will not lie. Yeah. That's part of what it did for my family.
Amen.
Amen.
Regardless of political beliefs or what's going on that's attacking this industry that we
Absolutely.
survive on out in West Texas, oil and gas, petroleum makes the world go round. It has for many years, and it will for the rest of our lifetime, no matter
Absolutely.
how people want to fight it.
Absolutely. And I really appreciate you saying that, because I haven't had an opportunity to explore that angle with anyone yet, which is, right, this is not a political show, because what's going on, let's say in oil and gas, has already been going on. Whether I came to comment on it or not, it was already going on. And the only thing I'm here to do is discuss about the people who work there. And I don't think that anyone, no matter what your political position is, I don't think that you want to put kids on the street with no shoes because their families don't have work. I'm sure you want everyone to be educated, because everyone plays a part in making America great. As a matter of fact, I thanked a soldier one time at the airport, and he turned it around on me and he said, "No, thank you." And I was shocked. He said, "Thank you for what you do. It's why I do what I do." And I was really blown away by how he turned it back on me and made me realize everyone's job is critically important in the project we call the United States.
Yeah, it takes every one of us.
It takes every one of us,
Yeah.
right? So I'm not here to be political. I'm just here to support the people who are doing the job, that without that, we don't have electricity, we don't have plastics, we don't have anything. So like you say, even if we converted to electric vehicles tomorrow, they're still going to be pumping oil and gas in the Permian for another 100 years, because without that, you don't have textiles, right? Artificial textiles. You don't have plastics. We still don't have jet fuel yet, right?
Got to have the electricity to charge the electric cars.
Right.
Where's that coming from?
Exactly. And a lot like Elon Musk, see, he was very savvy when he was addressing the big eight, or the automakers, and he said oil is not going anywhere in the foreseeable future. See, he copped it to the people, and he's like, this is a trend. I've started the trend. The trend eventually will take over. Yeah. We're not going to argue that. But what you're doing today and what got us to where we are today has been critical to our lives and the lives of the people around the globe. Yeah. So that's not going anywhere.
And we just happen to be sitting on top of one of the biggest deposits in the world.
Exactly. But every business in Midland is an oil business, because everything rises and falls in Midland, whether it's a pizzeria, whether it's a knife shop, whether it's a mortgage banker. Everything goes up and down on oil.
Oh, yeah, absolutely. If it wasn't for the oil and gas economy, I wouldn't be in West Texas right now. And if it wasn't for, shoot, I might be in Dallas. Who knows doing what? Maybe what would be a good job for me if I wasn't in
rodeo clown? No, I don't even need to think about it. No, just rodeo clown.
Yeah, I mean, I'm short and I'm stocky. The bulls wouldn't stand a chance. Insert eye roll there. I'd be dead in a week.
No, and you'd bore them to death with talk about how to fill out that 1007 properly.
1003. Don't forget the 1003.
I forgot. It's been so many years. I'm glad I've forgotten that it was a 1003. God. And doing the GFEs way back in the day, the good faith estimates. That's how old I am.
That's aging you.
Yeah, exactly. You just call it GFEs. We don't even call that, because nobody wants to pretend it's a good faith estimate, so we don't call it that.
I will name no names, but you can tell the age of a real estate agent if they ask for the GFE these days. It's like, yeah, that's gone away multiple years ago, but thanks for letting me know you got experience.
Right. What's that? Is that an iPhone 3? You're so cool. Ooh.
Going big time.
Hey, listen, depending on the condition, you make good money on that these days.
You know, it ought to be in a museum. One of these. I've got every iPhone that I've ever owned, but I don't know what good they are anymore.
Well, really? Actually, I think they found an unopened iPhone 3 in the box. They even X-rayed it, scanned it, confirmed that it is inside the box. It is NIB new in box. Yeah. Dude, I think, and I could be wrong, it sold for over $500,000.
Wow.
If I'm not wrong.
See, I've just been wanting to go back to my grandparents' house and dig through all the old Disney movies and see what kind of gold I could find from an original Lion King on VHS.
VHS. I was going to say Betamax doesn't count. You're not spring chicken yourself over there. Trying to throw it over here on me.
VHS was where it was at. I bet we could pop some of those old Disney movies onto eBay and come up with down payment for the house.
Dude, I'm so sad. I even remember 12-inch laser discs. So now we're going to move on. Now we're moving on. Don't laugh at me, you bastard.
We'll quit aging.
We're doing that. I'm old. But listen, the fantastic thing is that, as we said, if you need to get a mortgage, it's not impossible. It's very doable. And if you think about it, people do it every day across the country. In your situation, even though you're a badass and you work in the oil field and you've got a lot of interesting things, your 1099 for part of the year, your W-2 for part of the year, it's not a big deal. There's more than enough people and more than enough resources, especially beginning with our good friend Rodger Horton, because how much of your business in your loan origination would you say historically has been oil field workers?
Man, that is a great question. I have no idea the answer, so I'm just going to guess. I'd probably say 70 to 80%.
Holy cow. Okay.
Yeah,
that's
I mean,
solid.
like you said, that's the bread and butter of the economy out here. I mean, aside from that, we've got teachers, first responders, medical professionals. I mean, there's a lot, but oil and gas is what brings people to the Permian Basin. So I'd probably say 6 out of 7 of every applicant that I have is attached to the oil patch in one way or another. I mean, directly attached, not like we were talking about.
Right. Well, and that's exactly the kind of knowledge that I think that people are going to need when they come in to get a mortgage. Because, again, it's a scary process, especially if you've never done it before. So you're going to want to make sure that your first stop is with a mortgage banker so you can get qualified. So that way you can look like you know what you're talking about when you go see a realtor. Because nothing sucks more than getting in front of a professional and looking like an asshat.
Oh, and just running all over town. I mean, like I said, hello, realtor. Yeah, I want to buy a home. Are you pre-approved? No. Okay. We'll call Rodger first.
Right.
You know? I mean, people don't know what they don't know, so you got to start somewhere, and a real estate agent is a fabulous place to start, but they got to be able to know that you can buy.
Right. And even at that, see, this is one thing that I learned so long ago. You really need to respect your professionals. So, like, even if I was going to go talk to a lawyer, I spend a week or whatever doing my own research on that question that I'm going to, so that way I have an intelligent question, and I'm not paying to be taught 101.
Yeah.
Right. And some people are nicer than others, but if you think about it, you're also in a way wasting their time by doing 101, when if you came with a really insightful, juicy question based on your actual situation, now you're really making them say, today is a day I'm glad I went into this business because someone had something complex and I was able to figure it out.
Yeah, absolutely. And, after COVID or during COVID, nobody could meet face-to-face, or they didn't want to. We've always had the ability to take applications over the phone or online, but when you're borrowing 6 figures worth of debt that you're theoretically repaying over 30 years, and it's the first time you've done it, I really prefer to meet people face to face. We don't have to do that, but that's another thing with just having the experience of West Texas is like somebody can tell me that they're a pumper and I know what that consists of. I know kind of what their schedule is, what their hours are. I can figure out their income. I mean, guy last weekend I sat down and talked to, I'm still trying to figure out how I feel about this, if it was my gig, but this guy worked 14 on, 7 off. So he had a week off every 3 weeks. Right. But man, during that 14 on, he is on, man. He is killing those hours. But how do you calculate income when you're 14 on and 7 off? I mean, that's another one of those guys that they're pushing into overtime territory by Tuesday afternoon, but then they're off for an entire week. So yeah, that it gets fun. You gotta have somebody that knows what's happening when you're calculating that income, instead of having somebody that's sitting behind a desk at a call center in Ohio that wouldn't know what a pump jack was if it snuck up on them.
No, and this is me saying it, not you, because you're in the business, I'm not. But it's in no offense, obviously, it's like Rocket Mortgage or something like that. I'm not taking anything away from any professionals in the industry, because I've been in the industry and most people are very dedicated professionals, but it is not the same. It is not the same as talking to someone who lives here and knows what's going on. Rodger, what was the name? The name of your company is Benchmark?
Benchmark Mortgage, yes, sir. We have been in the Permian Basin for 9 years, been in Texas, and were founded over 22 years ago. But Permian Basin proud for 9 years, and can't wait to celebrate 10 next year.
That's baller. That's baller. And are you the manager here in Midland?
So I'm a managing partner. Yes, and actually, a little plug too. Our team with the MRT Reader's Choice for the 5th year in a row just took gold
sweet.
for Reader's Choice, and in a brand new category for just solo mortgage lender, I got silver for the year. So it's probably a lot of a popularity contest, but we've been the homecoming king and queen for 5 years going as a team, and I put on that silver medal this year as solo mortgage guy. So very proud of that,
dude. There's a reason for that. And my friends, I think as you can hear, Rodger, he knows what he's talking about. He's one of the best people you can talk. And I've been in this industry. That's the other thing. I've been in this business, and I've met a lot of mortgage brokers. And I'm telling you, I would not have anyone come into the studio and talk to you guys if I didn't trust him 100%. And I have trusted him. This is also part of it. So, my friends, Rodger, thank you so much. Will you come back on the show?
Anytime you want. What do you want to talk about next?
I don't know. We can listen. I'm sure we'll think of something that's really fun, whether it involves firearms, guns, or anything else. We'll figure it out.
I mean, we got football about to start back up. We've got 2 Texas teams ready to make the playoff push for Major League Baseball. I mean, Cowboys, Longhorns, Astros, Texas Rangers.
No, man, see, I'm gonna cop here on the air. See, you lost me on that. See, because I'm a Formula One kind of guy. I see the season's gonna start wrapping up soon.
Formula One's about to be racing down the Las Vegas Strip.
I know, dude. We have to get a trip together, and maybe what we'll do is we'll get some fans together. If we have any Formula One fans out in the audience, you let us know. And we'll see what we do to organize a trip this year and next year. That would be amazing.
Man, I tell you what, we need to pick up mortgage business to be able to afford those tickets. My casino offers have been coming in through the email for Formula One weekend in November on the Strip, and let's just say it's the equivalent of Super Bowl and New Year's Eve and March Madness all rolled into one. Yeah. That will not be a cheap trip to Vegas in November for F1.
You listen. I promise. I'll start practicing my yoga to fit in that suitcase of yours.
Or your card counting.
Right. I already got enough problems. I can't count higher than 21. All right, my friends. I appreciate it. I hope you all have a great day, and we'll talk to you soon.
Thanks for having me.
Thank you, Rodger. Wow, I don't blame you. That was a lot of information in there. Rodger is incredibly knowledgeable, incredibly friendly, and he really does go out of his way to make sure that you get exactly what you need. I personally have had the pleasure of working with Rodger. I've seen his expertise. I've seen how he makes sure that everything is right the first time, because surprises are for birthdays, okay? You don't want that on your mortgage statement. Remember, reach out to Rodger. You can find him at Benchmark Mortgage. You're going to find all his contact information in the show description below. And thank you very much, and we'll see you on the next one.
The Oilfield Leader Podcast is brought to you by executive producer Daniel Corral, executive producer Jim Lynn, executive producer and voice talent, me, Mad Mac, production assistant Caleb Knott. The Oilfield Leader Podcast is produced and hosted by Christian Lombardini. Copyright 2023. The Oilfield Leader and Christian Lombardini, all rights reserved. Peace.